Yes, people, good evening to all of you. Good morning, good afternoon, good evening to all South India students. How are you? Hope so you are good. I am also good. Good evening to all of you. So guys, you know that we were discussing about the miscellaneous provision topic. Welcome back after long break. So we were discussing about the miscellaneous topic, miscellaneous provision topic. And in this particular topic, we have discussed the various concepts till now. Yeah, Nehal. Good evening to Ajay. Danush, good evening to all of you. Wish you a happy festival season. Yeah. So guys, in the last lecture, we have discussed the 269 SS. After that, we have discussed 269 ST, 269 T, 269 SU. We have discussed cash credit section 68. We have discussed unexplained investment 69, 69A unexplained money or asset, 69B that is partly you have disclosed the asset, you have not fully disclosed the asset. Unexplained expenditure we have discussed, amount borrowed or repaid on the hundi we have discussed. Certain transfer may be treated as void, that we have discussed. After that, provisional attachment of the property, and this is very like expected question in the examination. For 2-3 marks they may ask you, or 4 marks, okay, when provisional attachment is possible and all. And there were some question were in the homework also, I think. Sharlena, there were some question in homework. Hope so you have completed that question. Okay. After that, 285B, that is related to the like film producer. If any person is producing the movie, or any person is producing any program or event management company, and if they paid the more than 50,000 to any person, then they have to give the detail of that person to the income tax department within 60 days from end of the previous year in the form number 52A. This point we have discussed. After that, we have discussed about the SFT and reportable account. And in the SFT and reportable account, I have mentioned that your detail will be submitted to income tax department when. So here it is a class of person or reporting person like bank or cooperative bank. If you have purchased the bank draft or banker check of more than 10,000 in the more than 10 lakh in the cash, then your detail will be with the income tax department. Or more than 10 lakh prepaid instrument in the cash, or in any current account 50 lakh or more is deposited, or 50 lakh or more is cash withdraw deposit, then your income tax department will get the detail. Cash deposit aggregate 10 lakh or more in saving account, then your detail will be with the income tax department. One or more time deposit, that is called FD, 10 lakh or more, then your detail will be with income tax department. After that, if you paid the credit card bill of more than 1 lakh or more in the cash, or 10 lakh or more by any other mode, then your detail will be with the income tax department. If you purchase the bonds or debenture or shares of any company, or buyback of the share, or mutual fund of 10 lakh rupees or more, then your detail will be with the income tax department. After that, if you purchase the foreign currency or through any card, if you made the payment in the foreign currency of 10 lakh or more, then your detail will be with income tax department. After that, if you purchase any immovable property or sell any immovable property and value or SDV is a 30 lakh or more, then your detail will be with the income tax department. And guys, if you received any cash payment from any person in the single transaction more than 2 lakh rupees, then you have to submit the detail to the income tax department. After that, we have discussed that like guys, in case of the transfer of your listed security or units of mutual fund, then this recognized stock exchange, recognized clearing corporation, depository as well as registrar, they have to give the capital gain detail to the income tax department. So you can get the pre-filed your capital gain detail, as well as if any company pay any dividend, then they will give the detail to the income tax department. Or any bank, cooperative bank, postmaster or NBFC, if they are paying the interest to you other than the Jan Dhan account, then your detail will be submitted to the income tax department. Now guys, this detail has to be submitted to income tax department till 31st May of the next financial year. But if it is not submitted, then from 1st June there will be a penalty. And there was one question related to this penalty, and that question you have to mark as IMP question. Okay. From 1st June, after the end of the financial year in which transaction is recorded, from 1st June till the date when you file the SFT, or as the case as the period is given in the notice, till that date there will be a 500 rupees penalty per day. After that, there will be a 1000 rupees penalty per day. After that, incorrect information in the SFT, suppose intentionally if any person is submitting the incorrect information, then there will be a 50,000 penalty on the bank. guys. As well as, suppose if every reportable account they have submitted the wrong information, then there will be a 5,000 for the every reportable account. But suppose, like for an example, you have given the wrong PAN number to the bank, then bank will give the wrong PAN number only. So here bank will pay the 5,000 rupees penalty, but bank can collect this 5,000 penalty from you, means they can collect from the account holder. Done. After that, we have started with the annual information statement, or I can say that the AIS. So there is one section, guys, 285BA. Nowadays, you know that whenever you file the return, so before filing the return, you download one statement that is called annual information statement. And guys, in annual information statement, every kundali, yeah, this is called your kundali. Like whatever transaction you did, everything is in AIS, that is annual information statement. So here, guys, PDGIT system, that is income tax department, or DGIT system, or any other person authorized by him to upload in the registered account of the assessee in an AIS in the form number 26 AIS within the 3 months from the end of the month in which information is received. So guys, this all people will file the information to income tax department. Income tax department will get that information. After that, income tax department will upload that information in your registered account. So whenever you will log into 26 AS now, then you can get all the details. So here, guys, annual information statement, you can get the details. So here income tax authority will upload, income tax authority or any person authorized by the income tax authority, they will upload in your registered account of the assessee in AIS in the form number 26 AS within the 3 months from the end of the month in which information is received. And guys, in the 26 AS, what information they will upload? So if information relating to your TDS and TCS, if someone deducted TDS or collected TCS, that detail will be in the AIS, as well as information related to the statement of financial transaction, as well as information relating to the payment of taxes like advance tax or self-assessment tax and all, as well as information relating to the demand and refund, as well as information relating to your pending proceeding, pending assessment, information relating to the completing proceeding or completed proceedings, or you can say that completed assessment. This all information will be in the AIS, that is annual information statement. Done. Now we are going to start with the authorized representative. Authorized representative means, guys, you know that whenever there is any assessment, then who can represent you in front of the income tax authority or in front of the ITAT and all, that person is called authorized representative. So who can be the authorized representative? So here, guys, authorized representative include any assessee required to attend before IT authority or ITAT can do so through an authorized representative. But who can be your authorized representative? So following person are eligible to the authorized representative of the assessee. One is the employee of the assessee. So your employee can attend any income tax authority office or ITAT office on behalf of you. That is called your employee. Officer of the scheduled bank in which assessee maintain the current account or has regular dealing, means here bank officer. Bank officer means bank manager. So on behalf of you, your bank manager can also represent you in front of the income tax authority. Or legal practitioner eligible to practice in the civil court. In simple word, advocate. Advocate can represent you. As well as the chartered accountant can also be your authorized representative, including the CA firm. So normally CA firm, whenever there is a firm, then they will write the firm and there is a partner. So guys, any chartered accountant, individual chartered accountant, or guys, any partnership firm, they can be authorized representative. As well as person who has passed the accountancy exam recognized by the CBDT like CS and CMA. So if any person completed the company secretary or if any person completed the CMA exam, then that person can also represent in front of the income tax authority. Or person who has acquired the degree in the commerce or law from the university approved by the CBDT. So if any university is approved by the CBDT and if that person has acquired the degree in the commerce or law from that university, then that person will be treated as the authorized representative, or any other person as may be prescribed. Any other person may be prescribed will also be treated as your authorized representative. Done. So this is the section 288. Just you have to read once. Okay. After that, guys, there is a one section 292B. Written order, notice, etc., etc., deemed to be valid. Now, what is the meaning of that? Guys, what happens? Suppose you know that my name is a CA Bhavar Borana. It is called Bhavar, but here in the spelling there is a N. But N is a silent. When we pronounce, then N is a silent. What happened? Suppose for an example, I have received one notice from income tax department and there has written only Bhavar, BHAWAR, Bhavar Borana. Suppose pen number, they have written my pen number only, but name they have written BHAWAR. So you can say that there is a clerical mistake in the name. There is a clerical mistake in the name. Question is that only on the basis of that, okay, if there is a clerical mistake in the name, can I say that this notice is invalid? Can I say that this notice is invalid? Answer is no, because there is a one section 292B, and that 292B will save the income tax department. Because this section says that in written or order or notice or summon, suppose there is any clerical mistake is there, and that is unintended mistake. There is an unintended mistake. There is no intent to make this mistake. Then guys, that will be treated as a valid only. It will not be treated as invalid. Or one more point, what happened guys, in our office one notice came and they asked okay, you should visit the income tax department on the 29 July 2016 suppose, and they have mentioned that you have to visit the income tax department by 12 a.m. Now you have to visit the income tax department by 12 a.m. You know that when 12 a.m. 12 a.m. is midnight 12 a.m. Suppose I will not visit at 12 a.m. na. So in simple word, when I visited 12 a.m. like there was a office was closed. So can I put the argument that sir 12 a.m. I have visited your income tax office but office was closed. So that's why I have not filed the reply and all. Question is that will be a sufficient reason? Answer is no. So here in this particular case, I can say that here this section will save the income tax department, and this section says that suppose in any written order, notice or summon, there is a clerical error. And that clerical error is not an intended error. It is an unintended error. This clerical error is an unintended. In that particular case, that clerical error is unintended, then it will be treated as valid notice only, valid summon only, valid assessment, valid note, valid written. So all people pay attention. What happened? A written or assessment or notice or summon or other proceeding cannot be rendered invalid merely because there exists some mistakes or defect or a omission in such written or assessment notice or summon or other proceeding. If such written assessment notice, summon or other proceeding is in substance and in effect in conformity with or in according to the intent of the act, means intent was right, but there was some omission or some defect or some mistake, then on the basis of that you cannot ask them to treat it as invalid. No, it will not be treated as invalid, it will be treated as valid only. But guys, what happened? One case law is a Maruti Suzuki India Limited 2019 Supreme Court judgment. What happened? Suppose guys, there was one company, that company name was the A Limited. Now what happened? That A Limited is merged with the B Limited. A Limited is merged with the B Limited. So there is an amalgamation. That earlier company A Limited was an amalgamating company. New company B Limited is an amalgamated company. Now what happened? There is an amalgamation, and this amalgamation information is already given to the income tax department. Means this company, amalgamated company, already given this information to income tax department that there was amalgamation. So now there is a new company. There is no old company, because after amalgamation there is always a new company like Vodafone Idea. Now it is a VI only. Earlier there was Vodafone and Idea was separate company, but now it is a VI only. Now what happened? It is already intimated to income tax department. Okay, there is one company, that is the VI. But what happened guys, you know that what happened here? Okay, income tax department issue the notice to the A Limited, but A Limited is not in existence. By mistakenly they have issued the notice to A Limited, as well as they have completed the assessment also on the A Limited. Means they completed the assessment on the A Limited. Now question is that can department say that it was not intentionally? Answer is here guys, here Supreme Court says that whatever assessment made on the A Limited, that is the invalid assessment, because now A Limited is not in existence. Now A Limited already closed down. Now here there is a B Limited, so assessment should be made on the B Limited. But here they made the assessment, they completed the assessment on the A Limited, that will be treated as invalid assessment. So here what this case law says, try to understand. Issuance of assessment notice in the name of non-existent amalgamating company, means old company, even after being intimated of the amalgamation, is not a curable defect under section 292B. Hence the assessment proceeding on the non-existent entity is a void ab initio. Mere participation in the proceeding by the amalgamated company would not cure this illegality. It means guys, in case of Maruti Suzuki case law, they are saying that if on the non-existent entity, if they made the assessment, then it is not a valid assessment, it is an invalid assessment. Now this last section I already explained you earlier also. Okay guys, for an example, if any notice is not served you on the time or not served in the improper manner, but assessment is already completed. After that, can you put the point that this notice was not served on the time or not in the proper manner? Answer is no. If assessment is completed, then you cannot object this. But if assessment is still there, suppose assessment is pending, then you can object that and you can say that this notice was invalid. But if assessment is already completed, then you cannot say that, you cannot file the objection. You got my point or not? Yes. So guys, here, where assessee appeared in any proceeding or cooperated in any inquiry relating to the assessment or reassessment, it shall be deemed that any notice served upon him has been duly served in the time, and he shall be precluded. Precluded means he will be stopped from raising any objection in any proceeding, inquiry that notice was not served upon him or not served upon him in the time or served in the improper manner. However, the above provision shall not be applicable if assessee has raised such objection before the completion of assessment or reassessment. You got my point or not? Yeah. Now guys, there is a one case law of the Lakshman Das Khandelwal case law. Now what happened in this case law? Department want to make the scrutiny assessment. So guys, scrutiny assessment is a 143.3 assessment, but you know that we have mentioned that I have already explained you if department want to do the 143.3 then 143.2 notice is mandatory. Means scrutiny notice is mandatory. Scrutiny notice is mandatory. Now what happened? Suppose department not issued the scrutiny notice at all and directly they completed the assessment under section 143.3. Is that will be a valid assessment? Answer is no. Because here says lawmaker says that here Supreme Court basically give the judgment and Supreme Court says that 143.2 notice is a that is the mandatory notice. If that notice itself is not given, suppose notice is not given in the proper time or proper manner, then it is okay. But suppose notice itself is not given, then it is not a curable defect. It is not a curable defect. So what here Supreme Court held that non-issuance of notice under section 143.2 is not a curable defect under section 192 BB in spite of participation by assessee in the assessment proceeding. Even assessee has participated in the assessment proceeding, then also it is not a curable defect. Assessment is invalid if notice under section 143.2 has not been issued by the department. Done. After that guys, there are three case laws are given, and what this three case laws says that, and what is the, you can say that the summary of all three case laws. Summary is this three case laws is about 269 SF and 269T. And after the reading of three case laws, we will able to understand that, we will able to conclude that if there is a genuine loan, even it is a cash loan, then section 269 SS or T is not applicable. So here what happened in first case law, that is V. Siva Kumar, Madras High Court 2013 judgment. What happened here in this case law? Can cash advance by partnership firm to the sole proprietorship concern of its partner be viewed as a violation of 269 SS to attract the levy of penalty? Means sole proprietor taken some advance or loan from the partnership firm and he is a partner in that partnership firm, but cash loan is taken. Question is that is partner taken the loan from partnership firm, is this section will be applicable or not? So here what High Court says that High Court held that there is no separate identity of the firm and that partner is entitled to use the funds of the firm. So basically in partner and partnership firm, they are saying that there is no separate identity of the partner and that partnership firm. In the present case, the assessee has acted bona fide and that there was a reasonable cause. Transaction cannot be said to be violation and no penalty is attracted in this case. In this case, there is no penalty. So in simple word, a partner has taken the loan, or you can say that advances from the partnership firm, even it is a cash, then section 269 SS is not applicable due to this particular case law because there is a bona fide reason. Now next part, what happened in the Triumph International Finance Limited 2012 Bombay High Court judgment, where assessee repay a loan merely by the passing adjustment entry in the books of accounts. Question is that suppose repayment is made by the adjustment entry, then there is a violation of 269T or not? For an example, suppose I borrow the 10 lakh from you and you borrow the 15 lakh from me. So we have repaid 10 lakh by accounting adjustment entry. Then question is that is adjustment entry there will be a violation? Answer is no, that will not be a violation. So here, where an assessee repay a loan merely by passing adjustment entry in its books of accounts, then such repayment of loan by assessee cannot be taken as contravention of 269T to attract the penalty under section 271E if the transaction is bona fide in nature, being the normal business transaction and has not been made with the view to avoid the taxes. Now there is a one more case law, that is the Muthoot Financial 2015 Delhi High Court judgment, Is penalty under section 271D imposable for the cash loan deposit received from partner? Suppose here partnership firm is taking the loan from the partner and that is the cash loan. Is here 269 SS violation is there? Answer is no. So in simple word, whenever partnership firm is giving loan or advances to partner, or partner is giving loan or advances to partnership firm, then there is no violation of section 269 SS. So here the High Court observed that in this case there was no dispute as regard to the money brought in by the partner of the firm. The source of money was also not doubtable. It is not doubted. The transaction was bona fide and not aimed to avoid any tax liability. The credit worthiness of the partner and genuineness of the transaction, coupled with relationship between the two persons and the two different legal interpretation put forward, could constitute a reasonable cause in the given case for not invoking the section 271D or 271E. The High Court held that the issue being debatable one, High Court held that the issue being debatable one, there was a reasonable cause for not levying the penalty. Means penalty is not applicable. So from the first case law and the last case law, you can conclude that if there is a bona fide loan and partner is given to the partnership firm or partnership firm is given to the partner, then guys, this section of section 269 SS or 269T is not applicable at all. Done. So guys, you know that there was some question in the homework, and the question were this topic is a topic number miscellaneous provision na? So this is the topic number, I think 5. Yeah, topic number 5. Now just check some question from topic number 5. So topic number 5, just check your compiler. So guys, from question number 1 to question number, I think question number 9, 10, no 9, till 9, there were homework except question number 8. So 1 to 7 and question number 8 were homework. You have any doubt? You did the question number 6 or not? You did the question number 6 or not? If you have not did the question number 6, then just do now this question number 6. Guys, here bank has to file the SFT till 31st May of the next financial year. Otherwise, from 1st June, that penalty is applicable for 500 per day, and it is applicable till the date of the notice. Means whatever time limit given in the notice, till that date this penalty is applicable. So time limit given in the notice, till that day penalty is applicable 500 per day, and after that penalty will be the 1000 per day. So just check this question. Just check the question number 6. Please, I am going to give you 2 minutes time. Just check the question number 6. Yes, people, done. Okay. So guys, this was the question number 6. After that, 7 was in homework. Question number 8. Now guys, question number 8 I have not discussed in the classroom. This concept is not given in the compact, but directly I covered the question. Question number 8. You have to do at your homework. Yeah, and very simple question. And this question is about the mode of service of notice. Okay, how income tax department can serve the notice. So generally income tax department serve notice through the post or courier or directly like email. Nowadays it is directly email. They can email also. So there are certain mode, through this mode they can serve the notice or summons. Okay, so this just you have to remember this much and just you have to read it. And second is, okay, guys, in case of the on whom should the notice be addressed and served upon in case where the assessee is dissolved firm or deceased person or partitions HUF. Means for an example, if any partnership firm is dissolved, then obviously like any person who was the partner at that time, notice will be served on partner. Or suppose in case of the deceased person, if any person is died, then his legal heir. Or in case of the partition of HUF, last manager of the HUF, they will send the notice to that person. So just you have to read this question. Not more relevant for the examination, but it is given by ICI. So I just cover here, okay? But I have not covered in the concept book. After that, question number 9 is related to attachment of property. I think you did it. Question number 10 is related to authorized representative. That today we did this concept, authorized representative. So in case of the authorized representative, chartered accountant or your employee or bank manager, that person can be your authorized representative. Okay. So this is the question number 10. Now after that, question number 11 is basically related to the 292B. So here guys, if there is any clerical mistake and all, then it can be it will be treated as valid only in the notice or summon if there is a clerical mistake, and that is not a intended. That is not a intended, means unintended mistake is there. Like in case of Bhavar, they just skip the N and they just have written the BHAWAR. Then that is the unintended mistake. That is about section 292B. After that, guys, question number 12 is related to the application of income. Application of income concept that we have already discussed in the topic 1. But one question was there in the ICI material, so I have considered here. Okay, so just you have to do this question at your home. After that, there is one concept of HUF related. There was one question that is also given in the ICI material, so I have considered here. This is also in the homework. And question number 14, this concept also I have not discussed in the compact, but just I have covered one question, that is the recovery proceeding of the TRO. TRO means tax recovery officer. So guys, suppose if you receive the demand notice and within the 30 days, if you not paid the demand notice, then recovery officer will start his working. He will initiate the work and all. So how recovery officer will attach your property, how he will sell your property? So this is one question is given. Just you have to read once at your home. So this is the completion of concept of miscellaneous topic and all the question of miscellaneous topic. Question number 15 is also related to the TRO, that is tax recovery officer only. So this last two question is on the TRO, tax recovery officer. This concept we have not discussed in the classroom, but just I have covered the two question here, because if they ask you any question from this part, then you can remember this. Okay, so this is the question number 14, that tax recovery officer, how tax recovery officer can recover the outstanding demand and all. So this is one question number 14 as well as the question number 15 you have to do at your home. Okay, so this is the completion of this topic. That topic name was miscellaneous provision. Now today, which topic you wish to study first, black money or set up and carry forward? Tell me, black money or set up and carry forward? Nehal. Black Money Act or set up and carry forward? Which topic you wish to study first? Okay, sir. So you know that everyone answered that black money, because you know that from name only, it is look like so fascinating, na? Name, it's a black money act. It means like, sir, there will be a lots in this act and all. So we'll start with the black money. Okay. So guys, this topic we will complete today itself. Very simple topic. Black money. So Black Money Act. There is a Black Money Act 2015. And guys, earlier this topic was not part of the CA final. Only first time they have included this topic in the CA final. So first time they have included this topic in the CA final. Earlier it was not part of the CA final. So Black Money Act 2015. And guys, this topic will cover the 4 marks in your examination. 4 marks, 100% you will get the 4 mark question in your examination. And we will try to complete this topic within 1.5 hour. So 1.5 hour means 90 minutes, and this 90 minute will give you the 4 marks. And ICI has covered 5 question in their module. That all 5 question we will discuss today in the classroom itself. Okay. So Black Money Act, 4 marks weightage in examination, and short you will get the question, because first time they included this topic in the CA final. Earlier this was not part of the CA final syllabus. First time they have included Black Money Act. Now first point is why there is a need of Black Money Act 2015, because now in this topic we are not going to discuss the income tax, we are going to discuss the Black Money Act. Black Money Act is a separate act. This Black Money Act is basically passed by Parliament on the 26 May 2015. And guys, this Black Money Act 2015 is applicable to whole India, and this is applicable from assessment year 16-17. From assessment year 16-17 it is applicable, and this act is applicable to whole India. Whole India means including Jammu and Kashmir. Including Jammu and Kashmir. So Black Money Act is applicable for Jammu and Kashmir also from assessment year 16-17. Now what is the need of Black Money Act? If you remember, before 2014 election, there was in 2013, that time Congress was in the power. That time everyone is talking about the black money. Everyone is talking about the black money, black money, black money. And if you remember, then Narendra Modi ji told that time there is lots of black money outside India, means Indian person deposited amount in the Swiss bank, as well as they are having the lots of asset outside India and all. So if we bring that black money in India, then every individual of India will get at least 15 lakh rupees in their account. So from that day, that 15 lakh rupees is, you know, that everyone says that 15 lakh rupees. So that 15 lakh came from there, because Modi ji told that India is having huge black money deposited outside India in foreign countries. Indians are having the bank account in the Swiss bank. They are having the account, they are having lots of asset outside India and all. So if that money came to India, then everyone will get at least 15 lakh rupees. Before 2014, if you remember Baba Ramdev, you know Baba Ramdev? So Baba Ramdev was talking about the black money and all. Every time Baba Ramdev says that black money, outside India, people park the black money, lots of black money through Hawala transaction. They acquired lots of asset and all outside India. So Baba Ramdev was also talking about black money earlier. But now Baba Ramdev says that in this biscuit, there is no maida. Okay. So इस बिस्कुट में मैदा नहीं है करके, ठीक है. आजकल इफ यू रिमेंबर द एड ऑफ द पतंजलि, सो बाबा रामदेव इज नाउ ऑलवेज सेइंग दैट कि इस बिस्कुट में, ही नेवर से बिस्किट आल्सो, ही से बिस्कुट, इस बिस्कुट में मैदा नहीं है करके, ठीक है. सो नाउ एवरीवन इज चेंज. सो फॉर दैट पर्पस, टू ब्रिंग दैट ब्लैक मनी फ्रॉम आउटसाइड इंडिया, आवर गवर्नमेंट, Modi government, they have passed one act that is called Black Money Act 2015. Now, why this act is applicable, on which type of asset or income this act is applicable? So this act says that, suppose if any resident person, this act is applicable only for resident person. This act is applicable only for resident person. Suppose if any resident person, all people focus here, if any resident person is having any undisclosed foreign income, or resident is having undisclosed foreign asset, undisclosed foreign income or undisclosed foreign income and undisclosed foreign asset. Undisclosed foreign income is, suppose I am having the income from foreign, but I have not disclosed that. That is called undisclosed foreign income. And undisclosed foreign asset means I am holding some asset outside India. I am a beneficial owner of any asset outside India, but I have not disclosed that asset in my return of income. That is called undisclosed foreign asset. So guys, here they came with the one act that is called Black Money Act. And this Black Money Act is applicable only on the undisclosed foreign income or undisclosed foreign asset. Guys, if there is an undisclosed Indian income or Indian asset, then obviously they will deal with section 68, 69A, 69B, 69C. There are lots of sections. But for the foreign undisclosed income or foreign undisclosed asset, they have came with one new act that is called your Black Money Act 2015. And under this act, they have mentioned that whatever the foreign income and foreign asset, whatever the value today, on that value, you have to pay the tax at the rate 30%. Means suppose if income tax department catch that income or catch that asset, then you have to pay the tax at the rate 30%. Means there is a flat tax rate of 30%. There is no surcharge, no health and education cess, flat 30% is tax rate. But guys, you will say that 30%, sir, it's very simple now. Only 30% tax you have to pay. We have discussed that Indian black money, like Indian undisclosed that asset or investment, there was a 78% tax rate. And on 78%, there was 10% penalty also. So approx 85 point something percent. But guys, you know that here tax rate is only 30%. But guys, on this tax, there will be a 3 times penalty. 3 times penalty. So 3 times penalty means, in simple words, suppose 30% is your tax, and if you take the 3 times, it means 90% is your penalty. So in short, you have to pay the 120% to the government. In short, you have to pay the 120% to the government. So under this act, what is the tax rate? Tax rate is 30%, and 3 times of the tax is a penalty. Means whatever the tax amount on that, there is a multiply by 3 times. 3 times means total, you can say that okay, here it is a 90%. So total 120% you have to pay to the government. For an example, suppose your undisclosed foreign income was 10 lakh. So on this 10 lakh rupees, if they catch that 10 lakh income, then on this 10 lakh, 3 lakh will be the tax. And guys, the 9 lakh will be the penalty. 9 lakh will be the penalty. So overall, you have to pay the 12 lakh rupees to the government. So your undisclosed foreign income was only 10 lakh, but here you have to pay the 12 lakh rupees to the government under the Black Money Act. So what I'm saying that this act is applicable only to the resident person, only to the resident person. And if resident person is having any undisclosed foreign income or undisclosed foreign asset, and income tax department get to know about that undisclosed foreign income or undisclosed foreign asset, then that person is liable to pay the 30% tax along with that 3 times penalty also that person is required to pay. Now guys, try to understand. In case of the undisclosed foreign income, you have to pay the tax in the year in the year for which that income is relates. In simple word, for an example, suppose I am having some foreign income, undisclosed foreign income. I am having some dividend from USA. Suppose I am earning dividend from USA and I have not disclosed that dividend. Suppose for an example, $10,000 I have earned in the previous year 2021. $10,000 I have earned in the previous year 21-22. $10,000 suppose again I have earned in the previous year 22-23 and I have not disclosed this dividend. So this is undisclosed foreign income. It will be taxable in the respective year only. Respective year means this $10,000 will be taxable in the previous year 2021. This $10,000 will be taxable in the previous year 21-22. This $10,000 will be taxable in the previous year 22-23. So in simple word, undisclosed foreign income will be taxable in the respective year only. From respective year means the year for which that income belongs. But guys, if there is an undisclosed foreign asset, then asset will be chargeable to tax in the previous year in which it comes to the notice of the assessing officer. Means here, if there is an undisclosed foreign asset, then that will be chargeable to tax in the year in which it comes to the notice of the AO. Means for an example, suppose I have purchased one property in Dubai. So suppose this is one house property I have purchased in Dubai. Now I have purchased this property in Dubai on the 16 July 2022. So in the previous year, in the previous 2012, for an example, I have purchased this property on the 16 July 2012. And that time I purchased this property for the 20 lakh rupees. 20 lakh rupees was cost. Now, and I have purchased on 16 July 2012, so I can say that the previous year 12-13, that was my purchase year. Now guys, I have not disclosed this property anywhere. But today, if assessing officer get to know about that, I am having property in Dubai. So suppose on the 10 December 2023, AO came to know that I am having the property in the Dubai. So what AO will do? AO will charge this income for the previous year 23-24. So what I have mentioned, in case of the undisclosed foreign asset, you have to pay the tax in the Black Money Act in the year in which it comes to the notice of the AO. In the year in which it comes to the notice of the AO. So here AO got the information in previous year 23-24. So guys, it will be taxable in the previous year 23-24. But question is that, sir, tax will be charged on which value? Because you purchased in the 2012 at 20 lakh rupees and now must be value is higher. So suppose today value, guys, here you have to calculate the value on the valuation date, and valuation date will be FMV on valuation date, and guys, valuation date will be the 1st April of previous year. So our previous year is 23-24. So 23-24 1st April will be the 1st April 2023, and on 1st April 2023, suppose value of this property is a 80 lakh, then you have to pay the tax on the 80 lakh. We will discuss about the valuation rules, but here value will be the 20 lakh rupees is the cost, and NRV on the valuation date. Valuation date is the 1st April of previous year in which that asset is accessible for tax. And here guys, this was undisclosed and it will be charged to tax in the year in which it comes to the notice of the AO, and AO notice in the 23-24. So here it is charged for the 23-24 and 23-24 1st April 2023. Whatever the FMV as on valuation date, that FMV or your actual cost, whichever is higher, this actual cost or your FMV, whichever is higher, that will be treated as the value of the asset. And on that, you have to pay the 30% tax and multiply by 3 times penalty also you have to pay on the tax. So on the tax, you have to pay the penalty 3 times. You got my point or not? Yes. So all people, pay attention. Again, I am discussing whatever I have discussed till now. So guys, Black Money Act 2015 examination, it will cover the 4-mark question. This is applicable from the assessment year 16-17. It is applicable to whole India, including Jammu and Kashmir. This act is applicable only for the resident person. And this act says that if you are having any undisclosed foreign income or undisclosed foreign asset, then on that you have to pay the tax at the rate 30%. Now, undisclosed foreign income will be taxable in the respective year. Income belongs to any year, it will be taxable in the respective year. But guys, undisclosed foreign asset will be taxable in the year in which it comes to the notice of the AO. And guys, in that year, 1st April of the previous year will be treated as your valuation date. And on that valuation date, whatever the NRV of that asset and actual cost of that asset, whichever is higher, that we will take as the value. And on that value, you have to pay the 30% tax and 3 times penalty you have to pay. Now guys, there may be possibility. Suppose this property I have acquired in Dubai in previous year 12-13 I have acquired. That time I was a resident, but suppose after 4-5 years I just left India and I shifted to Dubai only. Now in the current year I am non-resident, but the property I have acquired in Dubai, in that year I was a resident, but now I am a non-resident. So is Black Money Act is applicable or not? Because you are saying that this act is applicable only for resident person. Now in the current year 23-24 I am a non-resident, but in the year in which that asset were acquired I was a resident. So question is that is this particular act is applicable in my case or not? Right answer is yes, because lawmaker says that suppose in the current year you are either non-resident, or you are resident but not ordinarily resident in the current year. Means you are resident but not ordinarily resident in the current year. But in the year in which asset were acquired in that year, or if you have earned the income that year you were the resident. Means in the year in which asset were acquired or income you have earned in that year you were resident, then this act is applicable. So in simple word, this act is applicable for 2 persons. One is a resident person in the current year, or suppose that person was resident in the year in which asset were acquired, or in the year in which that income has earned, but in the current year he is a non-resident or R but NOR, then this particular act is applicable. Answer is yes, this particular act is applicable. You got my point or not? Yes. Now we'll check directly from your book. So all people, just focus to the book. What is written in your book? So here, Black Money Act, that is page number 108, I think. So just check page number 108, Black Money Act. Overview of the black money and imposition of tax law. The black money, name of this act is Black Money, Undisclosed Foreign Income and Asset. Black money means undisclosed foreign income or asset, and imposition of tax act 2015, passed on 26 May 2015 and applied to whole India with assessment year 16-17. Now what charging section says that? Charging section says that every assessee. Now here, who is the assessee? So directly we'll check the assessee first. Here assessee means a person resident in India as per section 6 of Income Tax Act in the previous year. So either the person is resident in current year, or guys, a person is non-resident or resident but not ordinarily resident in the previous year. But who was a resident in India either in the previous year in which undisclosed income relates, or previous year in which undisclosed asset located outside India was acquired. Means in the year when that asset were acquired, that year he was resident, or in the year in which that he has earned the income outside India, in that year he was a resident, then also this act is applicable. So here assessee means either person resident in current year, or current year he is a NR or R but NOR, but in the year in which asset were acquired, that year he was a resident, or that income is belongs in that year he was a resident as per income tax law, then that will be treated as the assessee. So here assessee would be liable to pay 30% tax in respect of undisclosed foreign income and asset of the previous year, means of whatever the undisclosed foreign income and asset of the previous year. Now undisclosed asset located outside India shall be charged to tax in it on its value in the previous year in which such asset comes to the notice of the AO. So undisclosed foreign asset will be charged to tax in the previous year when it comes to the notice of AO. So suppose I have acquired the asset 20 years ago, but it came to the notice of AO in the current year, so it is going to be charged in the current year. Now what do you mean by the undisclosed foreign income or asset? So it means total amount of undisclosed income of the assessee from source located outside India and the value of undisclosed asset located outside India. Now what is the undisclosed asset located outside India means? Suppose you are having any asset including financial interest in any entity. Financial interest in any entity means, suppose I am having the shares of Microsoft, or I am having the shares of Apple Inc., or suppose I am having the shares of any foreign company like Google. That is called financial interest. So guys, here undisclosed asset located outside India means any asset including the financial interest located outside India held by assessee in his name. Means suppose that asset is held in my name only, or in respect of which he is a beneficial owner, or I am that asset is not in my name but I am a beneficial owner. For an example, suppose one property I have purchased in Dubai in the name of one sheikh, but I am a beneficial owner, means money is given by me, but that property is in the name of the sheikh in the Dubai. So guys, he is a beneficiary, I am a beneficial owner. So beneficial owner means a person who give the money, so that is called beneficial owner. So either asset is held in your name only, or in respect of which you are the beneficial owner, and he has no explanation about the source of investment in such asset, or explanation given by him is of opinion of AO is unsatisfactory. Means either you are not able to give the explanation, or whatever explanation you are giving, whatever explanation you are giving, that explanation is not satisfactory. Whatever explanation you are giving, that explanation is not satisfactory, then it will be treated as undisclosed asset located outside India. So guys, any asset including financial interest in any entity held by assessee in his name, or in respect of which he is a beneficial owner and he don't have any explanation about the source of investment in such asset, or the explanation given by him in the opinion of the AO is unsatisfactory, then it will be treated as undisclosed asset located outside India. Now what do you mean by the previous year? Previous year is very simple guys. Previous year means period of 12 months commencing from 1st April and completing on the 31st March. That is called previous year. But there may be possibility, Suppose business is started in current year and business is closed down in current year only. Means business started in the current year and wind up in the current year. So business started in the current year and wind up in the current year. Then guys, previous year will start from the date on which business is started and it will be completed on the date when business is winded up. So this, try to understand. Period beginning with the date of setting up a business and ending with the date of closure of the business, or 31st March, whichever is earlier. Suppose your business is closed in the month of the December. So December, your previous year will be ended. But guys, suppose business is continue, then 31st March will be the end of previous year. But previous year will start from the date on which business is started. Now, period beginning with the date on which new source of income comes into existence. Suppose there is no business, but you are having some new source of the income come into existence, and ending with the date of closure of the business or by 31st March, whichever is earlier. Now, next part. Period beginning, there may be possibility you are doing the business from the last year. So your previous year will start from the 1st April, but it will be end. Suppose for an example, in the current year, your business is discontinued, or your business is discontinued, or suppose dissolution, or there is a liquidation of company, then till the liquidation, there will be a previous year. So here, period beginning with the 1st April and ending with the date of discontinuance of the business or the dissolution of the unincorporated body or liquidation of company, as the case may be. Now guys, this definition, there is no need to remember this definition. Okay, you just remember previous year means start from 1st April and end on 31st March. That is called your previous year. Done. So what we have discussed till now, charging section says that this act is applicable for every assessee. Assessee means a person resident in current year. Or suppose in current year he is a non-resident or R but NOR, but in the year for which that income is belongs, in that year he was resident, or for the year in which asset he has acquired, in that year he was the resident. So in that year he was the resident, then also this act is applicable. Now this act says that if there is an undisclosed foreign income or undisclosed foreign asset, then the value of that asset or on that income, there will be tax at the rate 30%, and we will discuss in the later part that there will be a penalty at the rate like 90%. So 3 times of the tax will be the penalty. Now there is a one question. Okay, sir, mostly in the examination you will get the question about asset only. Foreign, they have the asset, because suppose for an example, I am having one income from foreign, but income I will deposit in the foreign account only. So foreign account, in bank account I have deposited, so account will be treated as asset. So ultimately in examination as well as for the your purpose, you should remember the foreign asset. Now, sir, how we will calculate the value of the foreign asset? That is one interesting part, and that you have to remember. Okay, value of undisclosed asset. Suppose for an example, I have purchased one property outside India, and it was comes to notice to the AO in the current year. So guys, always remember in current year it is going to be charged. So current year is your previous year, and in previous year your valuation date will be the 1st April of previous year. So our previous year is 23-24. So our valuation date will be the 1st April 2023. Now sir, how to value the property? So try to understand. First is a value of the undisclosed asset, means how we will calculate the FMV as per the rule number 3.1. And rule number 3.1 says that first is, in case of the bullion, jewelry, precious stone, artistic work. So bullion, jewelry, precious stone or artistic work. Artistic work means archaeological collection, drawing, paintings, sculptures or any other work of art. Hey guys, can I say that they are mentioning about here, they are saying jewelry, drawing, painting, sculpture, archaeological collection, any other work of art and bullion. So they are in other sources we have discussed the jewelry, drawing, painting, sculpture, archaeological collection, any other work of art and bullion. So here jewelry, here drawing, painting, sculptures, archaeological collection, any other work of art and bullion, guys. In this case, just take the whatever your cost of acquisition of that asset, means whatever cost of acquisition of that asset, or NRV on the valuation date, whichever is higher. Means cost of acquisition of that asset or NRV as on valuation date, whichever is higher, that will be treated as your FMV, and on that FMV you have to pay the tax at the rate 30%. So for an example, suppose I have purchased one for jewelry in the foreign. I have purchased for 20 lakh. Today's on the NRV on the valuation date means 1st April is 80 lakh. So here 80 lakh and 20 lakh. Higher comes to 80 lakh. So 80 lakh will be treated as the value of that jewelry. So in case of the jewelry, drawing, painting, sculpture, archaeological collection, any other work of art and bullion, just take the cost of acquisition, means how much you have invested, and what is the value on the valuation date. Whichever is higher, that will be value, and on that value you have to pay the tax at the rate 30%. So here, for this purpose, assessee may obtain the valuation report from the valuer recognized by the foreign government. Now, from foreign registered valuer, you can get the report of the NRV. Now, next part is related to quoted share and security. Quoted share and security means any share and security which is quoted in any stock exchange outside India. Now, stock exchange outside India means established security market outside India. For an example, I am having the shares of the Microsoft, or I am having the shares of the Apple, or I am having the shares of the Google. So that Google share, Microsoft share, or like that like Apple share, they are traded in the Nasdaq in the USA. So in the USA stock exchange, in USA there are stock exchange, so they are traded in the Nasdaq. So that is known as the quoted share and security. So what value you will take for the quoted share and security? So here guys, they are saying that first take the cost of acquisition of that share, and guys, compare this cost of acquisition with average of the lowest and highest price on the valuation date in the established security market. What you have to do? First take the cost of acquisition, means whatever cost of acquisition, and second is a average of the lowest and highest price, average of the lowest and highest price on the valuation date. Valuation date means 1st April of previous year in the established security market. And guys, suppose on that day there was no trading, then just you have to take the average of the previous trading session. So here, next is, if no trading of such share or security on the valuation date, then just take the average of lowest and highest price of immediately preceding the valuation date when such share or security traded in the established security market. So for an example, I can take example. Suppose guys, I have purchased the shares of the Apple on 16 July 2007, and that time I purchased the share for the 10 lakh. Now, earlier it was not known, means it was undisclosed, but suppose in the current year, AO get to know that about the share. So first we have to take the valuation date. So here we have to consider the cost is 10 lakh. Now second is a NRV as on valuation date. Now NRV as on valuation date will be always 1st April of the previous year. In case of the asset, 1st April of previous year will be the valuation date. So here guys, our valuation date is 1st April 2023. So on 1st April 2023, suppose this share highest price was, for an example, highest price and lowest price, just take the average, and after considering the average, multiply by number of share. So suppose today value is the 90 lakh rupees. So guys, I have to consider here 90 lakh for the purpose of value of undisclosed foreign asset. So what I am saying that we have discussed about the two assets till now. One is in case of the jewelry, drawing, painting, sculpture, archaeological collection, any other work of art and bullion. Just take the whatever your cost of acquisition of that asset, or NRV as on valuation date, whichever is higher. Valuation date is a 1st April of previous year. Second is in case of quoted share and security, just take the whatever your cost of acquisition or average of the lowest and highest price on the valuation date in the established security market. Average of lowest and highest price on the valuation date in the established security market. But on valuation date 1st April or previous year, suppose there is no trading, then just take the last trading session average. You got my point or not? Yes. Now next part. Point number 3rd is an unquoted equity share. Just skip this point for the some time. First we will discuss about the unquoted share and security other than equity share. Suppose I am having some unquoted foreign security other than equity share, means foreign government bonds I am having, or some deposit certificate of the foreign company I am having, or preference share of the foreign company I am having. That is called unquoted share and security. So here guys, just take the cost of acquisition or NRV as on the valuation date. NRV as on the valuation date. And for this purpose, assessee may obtain the valuation report from the valuer recognized by the foreign government. Now, in case of immovable property, suppose I am having the property in Dubai, then what value we will consider? Whatever the cost of acquisition or NRV as on valuation date, whichever is higher. So cost of acquisition or NRV as on valuation date, whichever is higher. And for this purpose, assessee may obtain the valuation report from the recognized valuer recognized by the foreign government. So here guys, here NRV, here they consider only NRV as well. Why sir SDV is not considered? Guys, SDV, that stamp duty value, is for the Indian property na. that stamp duty act and all, that is applicable in India, na? That is not applicable outside India, na? That is not applicable outside India. So just you have to take the cost or NRV. So guys, we have discussed till now 4 assets. One is in case of the jewelry, drawing, painting, sculpture, archaeological collection, any other work of art, and bullion. Second is quoted share and security. Third is your unquoted share and security other than equity share. Fourth is immovable property. In simple word, can I say that in all the asset they are saying that just take the cost of acquisition or NRV on the valuation date. In all the asset they are saying same na, cost of acquisition or NRV on valuation date, cost of acquisition or NRV on valuation date. Here also cost of acquisition or NRV on valuation date. Here also cost of acquisition or NRV. And how you will take the quoted share and security NRV? Just take the average on valuation date. Average of the highest cost quote and lowest quote. So highest and lowest quote average, that will be your NRV only na. So guys, till now can I say that from here this first jewelry, drawing, painting, sculpture, archaeological collection, any other work of art, bullion, as well as quoted share and security, as well as guys unquoted share and security, as well as immovable property, everywhere they are saying just take the original cost or NRV on the valuation date, and valuation date will be the 1st April of previous year. Whichever is higher, that will be treated as your value, and on that value you have to pay the 30% tax. That is the point. Now guys, suppose you are having the unquoted equity share, then what will happen? So unquoted equity share, this point also we have discussed somewhere. I think in the accreted income we have discussed the similar concept. So here we will discuss that part. All people pay attention. Suppose for an example, in USA there is a one company, that company name is a Kin Private Limited. This is the USA company. And guys, in USA company, suppose I am having the 10,000 shares. I am having the 10,000 shares of that USA company, and this is the private limited company. So here all people pay attention. What happened? In USA, there is a Kin Private Limited is one company. Kin Private Limited is one company, and of that company, I am having the 10,000 share and private limited company. So unquoted equity share. And total share of this company is suppose 50,000 share. So I am a 1/5 shareholder. Now how to value this 10,000 share? How to value this 10,000 shares? So first I will take the cost of acquisition. There is no issue with the cost of acquisition. And second is guys, here how we will calculate the NRV. So on the valuation date, we will take the A plus B minus L divided by P multiplied by PV. Means in simple word, intrinsic value of the Kin Private Limited we will consider. Intrinsic value means A means just take the asset book value, but other than share, security, jewelry, drawing, painting, sculpture, archaeological collection, any other work of art, and bullion and immovable property. For this asset, just take the fair market value that will be given in B, and L means liability will be reduced at book value divided by total paid up share capital of that company multiply by how much paid up share capital hold by you. That will be the value of private limited company equity share. So private limited company equity share, how value will be derived or determined? Here guys, private company share value will be determined on the basis of A plus B minus L divided by P multiplied by PV. A means asset, but other than share, security, jewelry, drawing, painting, sculpture, archaeological collection, any other work of art, and bullion. Means for this asset, just take the fair market value. And guys, other asset, just take on the book value. And liability on the book value divided by total paid up share capital of that company multiply by how much paid up share capital is held by you. That will be the value of unquoted equity share. So here, notes. A means just take the book value of all asset. Book value of all asset. Other than covered in part B. So other than covered in this part B, just take the book value of all asset. But exclude TDS, TCS, advance tax. TDS, TCS, advance tax is not your asset. But guys, if there is an income tax refund, then it will be your asset. Deferred revenue expenditure is not your asset. So guys, book value of all the asset. Now, FMV you have to consider for the bullion, jewelry, precious stone, artistic work, shared security and immovable property as determined in the manner provided in this rule. So guys, you will take the Kin Private Limited balance sheet, and in balance sheet, suppose in asset side, if there is a shared security, jewelry, drawing, painting, sculpture, archaeological collection, any other work of art or bullion or immovable property, for those asset you will take the fair market value. Other asset you will take the book value, and guys, liability you will reduce at book value. Here, book value of liability you will reduce. but not including the following. Means here paid up equity share capital is not your liability. Amount set apart for the repayment of the dividend on the preference share or equity share, that is not your liability. Reserve and surplus is not your liability, but suppose if there is a depreciation reserve, there will be a liability. Provision for tax is not a liability. Provision made for uncertain liability is not a liability, and contingent liability is also not a liability. But guys, if there is a arrears of dividend payable in respect of cumulative preference share, that will be treated as your liability. So here, paid up share capital, equity share is not a liability. Dividend is not a liability. Reserve and surplus not a liability. Provision for tax is not a liability. Provision made for uncertain liability is not a liability, and contingent liability is not a liability. Divide by total amount of paid up equity share capital as shown in the balance sheet and divide by the paid up value of each such equity shares. So in simple word, what I am saying that here guys, for the how to determine the value of unlisted equity share in any foreign company. So I am having the unlisted equity share of the KIN Private Limited 10,000 share. So how to calculate the value of this 10,000 share? It's very simple. Just take the A plus B minus L divided by P multiply by PV. A means book value of asset, but B means guys for that 10 assets, shared security, jewelry, drawing, painting, sculpture, archaeological collection, any other work of art, bullion and immovable property. Just calculate the fair market value, fair market value, fair market value. Means NRV, and guys liability will be at the book value divided by total paid up share capital multiply by how much paid up share capital is held by you. So guys, in case of this all asset, can I say that how you will determine the value? Value means how you will determine the FMV. Just take the original cost or NRV as on the valuation date, and NRV as on valuation date. Valuation date will be the 1st April of the previous year. Done. Now guys, next asset is very interesting, bank account. Suppose there is an undisclosed bank account, means they got the detail that you are having the bank account in the Swiss bank. Then how will we determine the value of bank account? So they are saying that for bank account, we will take whatever amount deposited, deposit, just aggregate it. Whatever amount deposit, just you have to aggregate. Withdrawal will not be reduced. So in simple word, suppose I am having one bank account in the Swiss bank or any foreign bank in the foreign, and suppose first I have deposited the $10,000. After that I have deposited the $9,000. Suppose I have withdraw also. I have withdraw the money. Suppose $5,000 I have withdraw. After that I have deposited some $15,000 also. Now I have withdraw the $10,000 and I spent somewhere in foreign. Again I have deposited the $10,000 in that account. Then what will be the value? So guys, here value means just take the deposit amount. So here 10,000 plus 9,000 plus 15,000 plus 10,000. So 25,000 plus 10,000, 35,000 plus 9,000 comes to 44,000. So $44,000 will be the value of bank account. Withdrawal will not be reduced. Withdrawal will not be reduced. But guys, suppose if I withdraw from any one bank account and deposit in the another bank account. Suppose if I withdraw from one bank account and deposit in the another bank account, then sir, that deposit will be considered or not? Obviously that deposit will not be considered, because for an example, suppose this is one bank account with the Swiss bank. I am having one more bank account in the Canada. So suppose from Switzerland I have withdraw some amount and deposit in the Canadian bank, then for that deposit will not be considered, because that is withdraw from here na. So in this deposit it is already included na. In this deposit it is already included na. In this deposit it is already included na. So in this deposit, when it is already included, then obviously withdraw and you deposit in the another bank account, that will not be considered. So here, what do you mean by the bank account? Means how you will value the bank account. So here, the sum of all the deposit made since the date of opening the account, means from the date on which you have opened the account, from that day, whatever the amount deposited in that bank account, that will be considered. Now guys, when this act is came now in the 2015, then government has given you one option to declare all your foreign asset. They have given one option to declare your all foreign asset and just pay the taxes on whatever value on 1st July 2015. So when this act is came now, then government has asked you, okay, you can declare your foreign asset and just pay the tax on whatever value as on 1st July 2015. Suppose assessee declared this bank account. Suppose assessee declared this bank account that time, and he has paid the taxes on the whatever value on 1st July 2015. Then guys, here deposit we will consider only deposit made after that day. Means whatever deposit made before that, that is already considered here on the 1st July 2015 now. So after 1st July 2015, whatever deposit you have made in that bank account, that will be considered here. So what this point says, pay attention. Bank account. The sum of all the deposit made since the date of opening the account, and where such account is already declared earlier and tax penalty paid, the sum of all deposit made since the date of such declaration. Means after declaration, whatever amount deposited, only that will be considered. Now one note is given. Okay, suppose any deposit is made from the withdrawal of the account, then such deposit shall not be considered. Means suppose any deposit is made out of the withdrawal from account, then that deposit will not be considered. Means this is the example of I withdraw from the Swiss bank and I have deposited in the Canadian bank. Then that deposit will not be considered because I withdraw from some bank account. Means in that bank account deposit it is already included. Now, sir, suppose I am having interest in any firm or LLP or AOP BOI, then how to determine the interest value? Means for an example, there is a partnership firm in the UK and I am holding 20% PSR. If I am holding 20% PSR, then how to determine the value of that share? So here lawmaker says that just do one thing. Whatever the partnership firm, LLP or AOP BOI outside India, first calculate the net worth of the asset. Net worth means A plus B minus L. Means for that partnership firm or LLP or AOP BOI, first calculate the A plus B minus L. Means all asset book value, but other than that 10 asset, fair market value and liability is on the book value. So A plus B minus L, and guys, whatever the value that will be net worth of that firm or LLP or AOP BOI, first bifurcate this net worth in the capital ratio. Means whatever your capital account, so just give till the capital account. Means whatever your capital account, that much amount is allocated towards the capital, and remaining amount will be allocated either in the dissolution ratio, and if there is no dissolution ratio, then you have to bifurcate in the PSR, that is profit sharing ratio. So here one example is given, all people pay attention. Value of asset, how to determine the value of asset? So net worth of asset. So net worth of asset, how to determine? First distribute amongst the partner or member in the proportion in which they contributed capital, and balance net worth in the dissolution ratio or PSR in absence of the dissolution ratio. So suppose net worth of the firm is a 26 lakh and capital of the partner is a 10 lakh, 5 lakh, 2 lakh. So can I say that here 10 lakh plus 5 lakh plus 2 lakh, it's total 17 lakh. So out of 26 lakh, first 17 lakh will be bifurcated 10 lakh, 5 lakh and 2 lakh, and remaining is their dissolution ratio and PSR is equal. Then guys, 17 lakh will be distributed in the ratio of 10 lakh, 5 lakh and 2 lakh, and remaining 9 lakh means 26 lakh minus your 17 lakh, remaining is 9 lakh. 9 lakh will be distributed in the equal ratio, that is called PSR. So divide by 3. So 3 lakh, 3 lakh, 3 lakh. So here the Mr. A total asset value comes to the 13 lakh. Mr. B total asset value comes to the 8 lakh, and Mr. C total asset value comes to the 5 lakh. And guys, value of any other asset, in case of any other asset, just take the cost of acquisition or NRV as on valuation date, whichever is higher. So this is called your valuation of your asset, means how to value the asset. So all people pay attention. Again, I am repeating whatever we have discussed till now. So what we have discussed till now, pay attention. What we have discussed till now, just pay attention. We have discussed that Black Money Act. Guys, this Black Money Act 2015, that is Black Money, Undisclosed Foreign Income and Asset, Imposition of Tax Act 2015. This act says that if there is an undisclosed foreign income or undisclosed foreign asset, that will be chargeable to tax at the rate 30%. Now, income will be chargeable in the respective year only, but asset will be charged to tax in the year in which it comes to the notice of the AO. So here, assessee means, guys, a person resident in India in the current previous year, or suppose in current year he is a non-resident, or he is a resident but not ordinarily resident, but in the year in which that asset acquired or the income belongs, in that year he was the resident, then also this act is applicable. Now, how to value the asset? So valuation will be done on the 1st April of the previous year. That is called valuation date. So how to value? So in case of the guys here, jewelry, drawing, painting, sculpture, archaeological collection, any other work of art, whatever the cost of acquisition or NRV as on valuation date as on the 1st April or previous year, whichever is higher. Quoted share and security, cost of acquisition or average of that shares in the recognized stock market, established market, average of that price, that is called NRV, whichever is higher. In case of unquoted equity share, just find out the net worth of that company and divide by total paid up share capital, multiply by whatever paid up share capital like held by you. Now next is a unquoted share and security other than equity share, cost of acquisition or NRV on valuation date, whichever is higher. Immovable property, cost of acquisition or NRV on valuation date, whichever is higher. Bank account, just take the deposit. Just take the deposit. Okay, so that is bank account. In case of the firm, LLP, AOP, BOI, your share, that is A plus B minus L. But guys, here whatever the net worth, first apportionate till the capital account is there, and guys remaining will be distributed in the dissolution ratio or PSR. And in case of any other asset, just take the cost of acquisition or NRV on the valuation date, whichever is higher. Directly check your compiler. So guys, in your compiler, topic number 7. Check your compiler. Topic number 7. Topic number 7. Question number 1. Topic number 7, question number 1. Shiva is one question. Sir, I have purchased foreign asset in 2014 and till previous year 22-20 I have not disclosed, but in 23-24 I have disclosed. What is the taxability? It will not be covered in the Black Money Act. It may be covered in your Income Tax Act. Because in Black Money Act, it will not be covered. Okay, now question number 1. All people just focus here. Question number 1. After that, I will give you break for some time. Question number 1. What question number 1 says? Ravindra, a Indian citizen, left India and settled in UK on 10 April 2016. So guys, on the 10th April 2016, he settled in the UK. Earlier, he was in the India, but he settled in UK in 2016. So can I say that from 2016, he is a non-resident only? He had never left India previously since April 2008. So after April 2008, he never left India. So I can say that from April 2008 till 10th April 2016, he was in India. So he was resident also. He acquired a property worth 200 lakh in his name in the financial year 13-14 in Malaysia. So in Malaysia, he has purchased one property in his name in the previous year 13-14. That time he was a resident, because from April 2008 till 10th April 2016, he was in India. So now he is a non-resident, but in the year in which he acquired this property in the Malaysia, in that year he was a resident. Now what happened? Assessing officer came to know about this in the March 2024. So in the current year, AO came to know about that property. Based on the investigation made by the enforcement director in the some other person case. So when ED was doing some R&D in relation to some other assessee, and here they came to know about the, like here, Ravindra is having the asset. Now the assessing officer, having recorded some concrete evidence against the Ravindra, and issue a notice under Black Money Act under section 10. So under section 10, they issue the notice to assess your asset. And Imposition Act 2015 on 27 March 2024. So in the current year, he issued the notice. Mr. Ravindra Counsel contend that since Mr. Ravindra is not a resident in the financial year 23-24, a notice under section 10 could not be issued to him. Is the issue of notice to Ravindra under Black Money Act is tenable in the law or not? So guys, his chartered accountant or his advocate says that, his counselor says that since he is a non-resident in current year, so notice cannot be issued. So is his view is right or wrong? Right answer is his view is wrong. Because under this act, assessee can be either person resident in current year, or suppose in current year he is a non-resident or R but NOR, but in the year in which that asset were acquired, in that year he was a resident, then he can be treated as the assessee. So guys, it is tenable in the law. It is tenable in the law because in the year in which that asset were acquired, that year he was a resident now. Because asset were acquired in the 13-14 in the Malaysia, that time he was a resident. So notice is tenable as per the law. This is the question number 1. You have to read the answer in the break. Okay. So in break, you have to read the answer. Don't read now. Now just check the question number 4. Question number 4. Just check the question number 4. What question number 4 says? Pay attention. So there is a question number 4. Mr. Pilu, age 72 years, was a managing director of the Ashok Private Limited, Surat. Earlier, he was a MD of Ashok Private Limited, Surat. Mr. Pilu, age 72 years. He retired in the June 2009. He retired in the June 2009 and left India permanently in the January 2012. So January 2012, he left India. So now he is a non-resident in India because he left the India permanently in the January 2012. So now he is a non-resident. It came to the notice of the Joint Director of Income Tax Investigation in the June 2023 current year that Mr. Pilu had accumulated asset during the previous year 8-9 exceeding 500 lakh outside India, consisting of the residential apartment as well as deposit in the bank, which were not disclosed for income tax purpose up to the assessment year 12-13, for which the return of income was filed in India. So guys, he settled outside India from January 2012. So earlier he was in India. So earlier he was resident. Now in the previous year 8-9, he has acquired some asset. 8-9, he has acquired some asset of the more than 5 crore outside India, including residential apartment as well as the deposit. And he was not disclosed in the India in the return. So in return, he has not disclosed that asset. Now what happened? Mr. Pilu was served with a notice under Black Money Act in the August 2023. So department issued a notice that you was resident in that year, you acquired some asset outside India. So we are going to assess that we are going to assess that asset in the current year. Now Pilu is of opinion that since 10 years have already lapsed from the last assessment year in which it was assessed in India, no proceeding could be initiated against him under the Income Tax Act 1961 and the Black Money Act 2015. Mr. Pilu is a non-resident for assessment year 24-25. Discuss the liability of Pilu under black money law and state the procedure and methodology for determining the value of undisclosed asset outside India after evaluating the validity of the contention raised by him. Guys, you know that 10-year limit is in the income tax. In the income tax, we have discussed that income escaping assessment. You know that 10 year before case will not be open. But guys, in Black Money Act, there is no limit of 10 year. Even you have acquired the asset in 1972 and it was not disclosed. And in current year, suppose they came to know about that asset, then they will charge the tax. So 10-year limit is not applicable in the Black Money Act. It is applicable in the Income Tax Act, but under Black Money Act, it is not applicable. So guys, here in case of Pilu, notice is valid, and under Black Money Act, they may assess all the asset, and Pilu is required to pay the tax at the rate 30%. So just read the solution of question number 4 also. And guys, I can bet you in examination you will get the same question or similar question for the 4 marks. So just read the solution of question number 1 and read the solution of question number 4 and take a break for 10 minutes. Okay. So after 10 minutes, we'll start with the next part.